Welcome to the Jungle Savages. My name is Baloo the Bear, and here on the channel, we keep crypto simple. We just look at the market from a macro point of view so that you know where you are in the price cycle. We're still in a bear market. That shouldn't come as a shock, shouldn't come as a surprise. That being said, we could see a little bit of a rally for those wishing to trade the short term. We'll dive into the charts in just a moment. I want to take a look, a real close look at Bitcoin, Ethereum, and then I really want to dive into the Forex market because there's something very interesting happening inside of foreign exchange in the global currency market. We're seeing a lot of currencies lose value very, very quickly, and as a result, we're seeing the DXY, the US dollar currency index, on a large rally. Now, we've said here multiple times on the channel, the trend is your friend until it ends, and as long as the DXY was continuing to print higher highs and higher lows, we would continue to do so, and we have continued to do so. We are rallying until proven otherwise, so it is up only until we break some sort of structure. With that, let's dive into the king of all crypto, and that is Bitcoin. Just getting over a cold here, so sorry if I need to clear my throat. It's some disgusting phlegmy ASMR for you folks here, but we'll take a look at Bitcoin here on the daily. So we're still inside of this consolidation. I do not like this consolidation. It doesn't mean that we can't turn it around. It just means that in order for this consolidation to begin to present itself in a bullish way, we have to basically double the consolidation. So we've been here for 2 months. I'm not going to be happy until I see another 2 months showing that this distributional looking consolidation can begin to show characteristics of accumulation. So what we're looking at right now is we had an overthrow, an upthrust action on top of the trading range here. That did get a rejection. We didn't break structure to the downside, which is probably a good thing. If we do break below that 17.5 level, I would anticipate that that would probably be an impulse move to the downside, and we would see much lower levels. So we are holding that level for now. We did get a rally back up to the top of the channel, and that was met with another rejection. So this is certainly an upthrust. So we've got an upthrust action, and we have an upthrust inside of this consolidation. We don't have much to point to that shows anything bullish about this consolidation. So let's just clean up the chart here. Let's back that up. Things to look out for is, like I said, a break below this level. If we break below this level of around 18,000, 17.5, it'll probably head south rather quickly. But as it stands right now, we are holding. Let's go into the smaller time frames. Let's go to the 1 hour. And the 1 hour is kind of a mixed bag. You know, we are showing characteristics of accumulation here on the smaller time frames, so we could actually be setting up for a little bit of a rally. You can see a complex inverse head and shoulders formation taking place right now, where we are breaking out with a good amount of volume. So certainly a move to the upside is in the cards. I'm not trading it. I'm not going long or short. I'm quite short the macro environment, period. I feel that the best play for me personally is going to be holding a healthy cash position, with all honesty, into next year. I will reassess at the next calendar year and see where we're at. But you know, it's for those wanting to trade the short term. You know, you could have an intra channel move here where you could possibly get up to somewhere around this area, maybe $22,000, something like that, get you to the underside of this general area, maybe this support / resistance flip up here. Yeah, somewhere around $22,000 would be the target. So not a huge move. You know, we're looking at about a 10% move. Nothing to you know, shake a stick at, but yeah. Now the formation that I just discussed, you know, it doesn't come with it's not free of bearishness, right? So you do have this complex inverse head and shoulders here on the bottom, but you know, you've got this LPSY structure right here, very dumpy structure. You've got an upthrust here, a very volatile upthrust here. So there's plenty of bearish things that you could point to as well. When I see bearish things inside of a bullish pattern, I usually look at that pattern, look at that consolidation as neutral. neutral. Another way to say that this consolidation is neutral is it is a coin flip. If you go long, you're flipping a coin. If you go short, you're flipping a coin. You don't really have a competitive edge in this market with a consolidation that looks like this on the smaller time frames. It is breaking bullish for now, but we will see. If we can close some hourly candles above this level, I think that you could begin to think that we have the possibility for that rally up to 22. So if we do get some clean breaks above 19.5 on the hourly chart, you could assume that maybe going long is the play with a confirmation of that getting us back above 20. But like I said, I'm not trading it. All right, let's take a look at Ethereum. Ethereum, guys, proof of stake. Why are we not mooning? Why are we not mooning? We just had 10 halvings. 10 halvings and we're not moving. I'm being facetious. For those who have been watching the channel for a while, you know that we've been saying this is probably going to be a buy the rumor, sell the news event. Problem is there's no sellers. There's just no volume in this market overall. This was a big nothing sandwich. Nothing happened. We're meandering to the downside. My macro look of Ethereum is it's probably, you know, best case scenario, not going to do anything until 2020. It will probably get exciting around this time next year. So I think this time next year could be an exciting time for Ethereum. Not what everybody wants to hear, but hey, you know, we're just looking at the facts in the charts. This, you know, history does have a tendency to repeat itself. This is what happened last time. This is what happened the time before that. You go into a period of accumulation. The bear market doesn't care what your time horizons are. The bear market doesn't care what your expectations are. It typically just does what it does. And what it does is it trades sideways for a while. We're waiting to prove that the bottom is in. And how we do that is we begin to trade sideways. So right now we have our seller's climax, automatic rally, secondary test. If we can hold this level for the next 3 to 6 months, I think we can confirm that the bottom is in on Ethereum. And once you confirm that the bottom is in, all you need to do is have a cash position ready for those dramatic market events where you get these 20 to 30% moves to the downside, the market panics. Those are your buying opportunities. But as it stands right now, you know, lower highs and lower lows on the macro means that we have potential for another lower low in Ethereum. So we could be looking at about a $500 Ethereum if that trend does continue to the downside. So do be aware of that. Let's take a look at Ethereum on the Bitcoin pair. Not a very pretty picture. So this is leaning more into Bitcoin either trading sideways or maybe taking another leg down. Very distributional pattern here. This is almost a textbook Wyckoff distribution here with your up thrust right here, LPSY, another up thrust, probably going for an LPSY heading to the bottom of this widening megaphone pattern. So that would bring us back below the 0.05 level support on Ethereum. So long story short, I don't see anything taking off right now. I don't see anything ripping. I don't see a bull market happening for the foreseeable future. We do have that short time frame potential upside move for those who are really just giddy to scalp this market, but that's not me. And if you're new to this market, it probably shouldn't be you either. ETH BTC textbook distribution. Yeah, it's pretty clear that that's a distribution here. So we're going to do something we haven't done here on the channel for a while. I want to take a look at the point and figure chart. So for those who have never seen a point and figure chart, this was the original style of analysis. An O represents a down move, and an X represents an up move. And I'm just going to leave it at there because it does take a while to explain. But what I like about the point and figure charts is it's not a time-based chart. There is no time with these charts, whereas with a candlestick chart, each candle represents an increment of time. Here on the weekly, each candle represents 1 week. When you're on the point and figure chart, time is completely irrelevant, and all that you are paying attention to is price volatility. Price volatility is really, really important when analyzing long-term consolidations, long-term accumulations. And where we stand right now with our Wyckoff accumulation is we have our preliminary support here, which is lined up with this area right here. Let's get a better color here. Right there, our preliminary, let's go with blue. preliminary support level. We have our seller's climax right here, automatic rally right here, secondary test right here. So we're still in phase A of our Wyckoff accumulation. And that's provided that we are in a Wyckoff accumulation. There is also the possibility that this whole consolidation right here is our preliminary support, and we do have one more leg down and we would restart the process all over again. So we are waiting for that. That's the thing about phase A. You don't do anything. You don't do anything in phase A. You don't need to guess. You don't need to pick a side. You don't need to say, hey, the bottom's in. You don't need to say, hey, we're bullish. Hey, we're bearish. You're just watching. It doesn't fucking matter. You should have been out of the position a while ago. You know, we went short this market right around 45K when we broke down out of that bear flag consolidation in the context of a downtrend. So if you're in cash, obviously you're just observing. If you're holding your assets, you're freaking out a little bit. If this is your first bear market, I want to let you know that nothing is different. Nothing has changed. Everything is exactly the way that it always has been in every bear market. The emotions are the same, the time durations are the same, nothing has changed. So you don't need to really guess too much as to what happens next. What happens next is we either keep heading down or we start trading sideways. So if you have been holding the assets this long, you know, it's a tricky situation, and I can't give financial advice here. What I can say is you fucked up, and you know, that's not what people want to hear, but it's kind of the reality. Is you didn't look at the market correctly, you didn't take the appropriate action, and you overinvested because you have an emotional attachment to that and you're freaking out as to what to do right now. If you guys want better guidance in this market, get support, get a mentor. Doesn't have to be me, it can be anybody. You know, there's countless mentorships out there. I do my best to kind of teach the macro, teach the price cycle. The price cycle is one of the most important things to understand and learn. You need to learn where you are in a market price cycle. If that interests you, links below, check it out. We do have up to 30% discounts going on if you buy the yearly package. Just take a look down below if you're interested. If you're not, hey, keep on watching the show. All right, that's it for chat. Let's take a look at some Forex pairs. So Great British Pound, GBP USD. Not on crypto, no, Forex. All right, the Great British Pound. A lot of people in the UK freaking out. This has been in a decline for a while, showing an incredible amount of weakness overall. I mean, it shouldn't come as a surprise that the Great British Pound is falling. It's been falling for fucking years. It's been falling for a long ass time, and it's continuing to fall. But what's unique and what's interesting is not the headlines. You know, the headlines are talking about the Great British Pound. Guys, you pick a fucking chart. It doesn't matter. I'm here in Thailand, Thai baht, USD. Free falling, textbook distribution. Free falling, textbook distribution. I'm from Canada, USD. Free falling, not good, really bad. I don't like this consolidation at all. It's one of the better ones, honest, if I'm being honest, but yeah. Japanese yen, US dollar, absolute plummet from a distribution. Okay, what's another one? Korean yuan, plummeting against the US dollar. Everything is falling. Every currency is falling, resulting in a DXY. The dollar is rallying. The dollar is rallying not because of strength, but because of collapse of other currencies. So if you guys are not familiar with the dollar milkshake theory, it's let me try and find it here. We have it in the Discord somewhere. I think dollar milkshake. If you guys aren't already in the Discord, it is a wealth of knowledge. It is a treasure trove of information. If you guys are trying to navigate this market without even being like, you need support. You can't do this by yourself. And that's not me trying to sell anything. That's me. If you really want to make it in crypto and you don't have a Discord account, I don't think you're going to make it. And just for the simple reality of, if it's too intimidating for you to learn a new social media platform, you are at a serious disadvantage trying to learn cryptocurrency because you don't have the mindset to really dive into this shit. Let's throw that in the chat there. So there's the dollar milkshake theory. Go check it out. Very fascinating. But basically the TLDR on the dollar milkshake theory is as other countries, the dollar is the trade currency of the world. All countries need the US dollar to settle trade agreements. That's just a fact. Okay, so it doesn't matter if you're in Britain, it doesn't matter if you're in China, it doesn't matter if you're in Australia, it doesn't matter where you are. Your government or your trade partners have to deal in US dollars. And a lot of times they will take out debt, they will borrow money to service their trade agreements. Now the problem with taking out debt is as the dollar rises, it gets harder and harder to service that debt. So what ends up happening is these countries print more money in order to service the debt, and because they print more money, their currency devalues, and because their currency devalues, the dollar rises, making it harder to service the debt, so you print more money and you get into this really vicious fucking cycle. It's called the dollar milkshake theory. Go check it out. It's important for you to at least entertain what's happening with that as a potential. Not trying to FUD, not trying to say anything, but you know, the dollar's not looking so fucking shabby these days, I'll tell you that. Link in the bottom corner there, maximum security, $10 off. That's the best Bitcoin wallet I've found, by the way. That's not sponsored. I mean, there's an affiliate program, but they didn't ask me to like shill it or anything. Foundation Passport is the best hardware wallet solution that I found. It's very expensive. You know, if you can't afford it, don't get it. But if you're looking for the most secure Bitcoin solution that isn't a multi-sig wallet, you can do multi-sig with it as well, of course. But if you're just wanting like the most secure hardware wallet, then go check out Foundation Passport. It's completely air-gapped. You cannot connect it to a computer, period. Like it will not connect. It runs off fucking batteries. It's pretty slick. You can't fuck it up, basically. And that's what I like about it, is you're always going to have an air-gapped device. Go check it out. You know, you get $10 off. I get $10 off. It's not a big thing. I really do endorse that product. They're new, and there will be a video coming with that as well. All right, that is all the time I've got for today. If you guys enjoyed this content, please leave it a like. Don't forget to subscribe if you're, oh no, you guys are on Twitch. Follow. Although you can subscribe on Twitch. If you guys have a Amazon Prime membership and you want to support the channel, you can subscribe. Doesn't cost you anything, and helps get me a little bit of a kickback. So if you have an Amazon Prime subscription and you're not using it for another Twitch streamer, I would love it if you would do that for me. But yeah, that's all the time I got for today. Please trade safe. It is a jungle out there. Peace.